Hey guys, Darren here. Thanks for joining this week in options for the week of March 10th, 2025. And wow, it's already Tuesday. I've been traveling, so I apologize, but we're getting the video out and we're covering all the positions in our option trading portfolio today live on the platform. And we're going to touch on where we are in the market right now, how the different sectors are performing, and the bloodbath that's going on right now due to all the tariff talk. So be sure and hit the like and subscribe buttons down below. Download the free options workshop in the link below, and let's get started. All right, guys. So if we look at where we are over the last 5 days, we're down in the S&P 500. Let's see. Let's update this. Down about 4% in the S&P 500 just over the last 5 days. And you can see everything has just been down, hammered. Consumer discretionary, financials down 7%, and tech down 4.31%. So obviously a lot of my positions in my option trading portfolio got hammered right now, but hey, now's the time we want to be long in the market. If we look at year to date, we're down in the S&P about 4.54%. And look at technology, down 10% already year to date. And if we look at that fear and greed index, we're at 16 right now. So this is where everybody gets scared and they get out. But no, we're going to go through how to manage our positions, and so that when the market does come back, we're taking advantage of that. So interest rates, let's take a look. Now there's probably a larger prospect of interest rate cuts coming. So we're at 4.25 to 4.5 right now. And in May, we're expected to stay there, 59% chance. But then in June, if we look, there's a 1/4 point cut that is expected to happen, 55%. So better chance than not. And then that puts us at 4 and to 4.25, and then another one in July. So a couple of interest rate cuts, get this tariff thing resolved, and we can jump right back into it. And then continued cuts down the line. They talk a little bit about a recession. I don't think that's in store, but hey, let me know your thoughts down below. But with the ability to cut rates, I think we're in pretty good shape. And if we look at the calendar, for this week, we've got CPI and PPI Wednesday and Thursday. So those are the big, that's the big news. Let's jump into the trades. So again, it's been a bloodbath, but what's nice is we trade 30 to 45 days out. I do, and that's kind of my strategy. So a lot of these, I'm already in April at 37 days. So we've got some time. If I'm still in the red, I'll roll at around 21 days to the next month and hopefully collect some more premium if we're close enough. We can lose on put credit spreads if we are too far in the money and it's dropped too much. They can become worthless. So that's where you got to be careful when the market is where it was at, a little bit above the trend lines and a little bit high PE. You don't want to be too invested. So you want to have cash on the side. But now, hey, now we're in where we're at. So we're going to manage these positions. So we've got the 230, 220, and 235, 225. Put credit spreads on. If we go to the curve mode, we're on the Tasty Trade platform. There's a link down below. But we're profitable down to around 230. We're at 221. We're down 2.7% today. China tariffs are what I think is affecting Apple, but I'm long Apple. My target for Apple is much higher. They've got a ton of cash. My target's 260 in Apple. So I just keep that in mind. Here you can see we broke through support. We broke through. I've got the 13 days, the green moving average, and then the 50 days, the yellow, and then the purple is the 150, and the red is the 200. Down below the 200, it's like, hey, we're too late. We need to stay long at this point. And again, my target's 260. So I'm just long Apple with those put credit spreads. Airbnb, same situation, and pretty much you're going to see this throughout all these trades. But Airbnb, my target's much higher. 170. We're down below all those moving averages. So long Airbnb. They've got $4.2 billion in free cash flow. 170 is my target. I'm not worried at all about them long term, and that will jump up as soon as things move. By the way, if you'd like to receive the free option strategy trading guide that outlines all the option strategies and trade management, comment options guide down below and I'll send you the link. All right, guys, AI ticker, which is C3AI. All these AI stocks got hammered, and you can see right now it's down at support at 20. So we're small in this position. We've got put credit spread only $5 wide. So we'll just roll this from April to May once we get to around that 15 to 20 days to expiration. And I've got one call that I sold against the Leaps option. And my target is, up in that $40, $50 range. So double where it's at right now. Applied materials. We've got call credit spread or put credit spreads. I've got 2 calls that I sold against my. Oh no, wait, no, these are call credit spreads as well. So iron condors basically in applied materials, and we need a big move up. So we're going to make money on the call side, but lose on the put side. But again, I'm not worried about applied materials. I'm definitely long right here. You can see the RSI is way down. Target's 240, 100 points higher than where it is right now. The semis are just hammered like everything else. AMD, same situation. I'm in a lot of tech. So these are all hammered, but that's okay. These will all come back and be in a different position, 6 months, 9 months, and we'll continue to make money on the way up. We don't want to sell I don't want to sell. I want to roll these put credit spreads and then just sell calls against leaps on the way up. But 96 and target is much higher, 200, double where it's at. Amazon, great time to pick it up if you don't have it, if you're not fully in right now. Again, that fear and greed index is way down. This is when we want to be long. But $10 wide put credit spread in Amazon. Target is much higher. We're below those the 200-day moving average. So definitely long. APLD, Applied Digital, same situation. So long again, we've got 3 leaps options in Applied Digital. These guys are cloud services for high performance computing. Avago, Broadcom, we've got an iron fly at 220. So it's a little bit negative. We'll make money on the call side and then just roll out from April to May on the put side. And then I'll probably on a big day, I'll throw on another call. Credit spread. We're at 208. Wow, look at that IV rank at 100. But again, it's been hammered. It's almost lost 100 points, lost 80 points. So this is almost worthless. If we tried to roll it or close it right now, yeah, it is. How wide are we? Oh, we're $20 wide. Okay. So we would need to, let's see what happens if we try to roll it. Yeah, we could roll it out. And it would cost us right now. So yeah, it's hurting. We need to move up. And actually we're having to move up today, 3%. So it's got a ways to go though. Coin, similar situation. Look at that, 5.5% today. So we're just going to hang on to our puts. We're up $130 today, but I like coin much higher. It's only at 190. These are kind of worthless right now. Let's see if we tried to close right now on one of them. Yeah, 955. So almost $10 wide. The most we can lose is $10. So we're not gonna do anything. We're gonna stand pat. Hopefully it will come back and we'll be able to roll at around 15 to 21 days. But it's better to just leave it right now. We could very well be up and be able to roll these for a profit if the market continues to move up. Yeah, 5% per day, sure. CRM. Salesforce way down. We've got put credit spreads on again and definitely long. So you're going to see similar situation with all these guys. But you can see I'm in April, so we've got time to come back, and things may be completely different in a month. As soon as these tariffs get, if we get some concessions from other countries and deals made, that can really pump the market. Dell, we've got two leaps up today. FedEx, put credit spreads as well, 242, and we're at 240. So we're profitable on one in the profit range. But look where we are. We're down here. I've got to move my support line down now. Down here. Where is it? 240 now. 240. Let's just change that right now. Yeah. Market's a mess right now. But hey, it'll come back. Can't panic. Everybody's got to stay calm. 163. Great time to get into Google if you're you want to get in a good stock right now. But we've made money on the call side, but it's going to take some time. Actually, Google's down today. Wow. But my target's 215 for Google. They're monsters. They're gonna be fine. Home Depot. We've got iron condors on $10 wide. We're at 366. We're in the red, down below the 200-day. So everything. There's fears of a recession. I still think there's less than 50% chance of a recession. We've got put credit spreads on in Hood up today, 4.5%. Wow. So we need it to keep going. We're at 37. Hood had some real good earnings. My target for Hood is 70. They're into crypto now as well. IonQ, high performance computing, they've been kind of hammered. Up today, 85 Ivy rank. We've got time to come back. JP Morgan, I just got this yesterday actually. 230, 220. It's another move down, but hey, when we can have these big moves down, and this is like the highest quality, best bank stock, and it's at the 200-day moving average, I'm going to pick it up and go long when everybody's running. L3 Harris, defense is going to do well. 210, 240, Iron Condor. We are still in the profit zone on L3. And I like it higher, up to 280. So when we have these long-term targets in mind, I don't get too worried about these big drops in the market. I mean, 10% correction, yeah, it's scary, but hey, these things are going to happen. That's why we don't want to be all in when the market's up. 840, 820, and 830, 820 put credit spreads. Again, if you want to see how we trade and manage these, there's a link down below to the free options workshop. So check that out. So we're still in March but oh wow, we need to roll those out. I've got to look to roll these March positions because we're at 10 days. So I think on the call side we're good, but on the put side we're in the money, 840 and 830, and we're not having to move up today. So we'll look to close those out here shortly. Lockheed Martin, 450. Actually, the defense stocks have held up pretty well. We're still in the profit zone. If you look at the profit zone here, we're at 470. We're profitable all the way down to that short strike, 450 minus the credit collected. But we've done pretty well in Lockheed. Lam Research semis, yeah, it's been hammered, 72. We're down at the lower end of our put credit spread, but definitely long Lam. It's down at that support line, and my target's 110, much higher. Again, we can have quick recoveries. Morrow was up earlier today, and it's down now. Wow. But Morrow, crypto mining company, they're going to do well in the long term, but way down right now. So I'm just going to stay long. We're out over a year, so I'm not worried about it. Meta, good time to pick this up. It's down. Moving up a little bit today, but we are in the red. We're at 640, 630. But again, look at my target for is 730, back up to where we were. And yeah, we'll get there. It's going to be a different story in a few months. So we're just going to continue to hang on to this. Once we get to 15 to 20 days to expiration in April, then we'll roll out to May and hopefully collect more premium. We should have a move up before then. 75.85 put credit spread. We're at 66. Marvell's been getting hammered just like all these others, but you can see same story. Yeah, I don't even know that we're going to go through all these. Let's pick out a couple more. United Health actually has done well. We're at 450, so we're in the green, and you can see we're profitable. So the healthcare, it does help to be in a few different sectors. So healthcare's done okay. Health and beauty, Ulta, not so much. 360, 350. It's continued to get hammered. This is actually a Buffett stock, but look at this, way down. But the financials on these guys are really good. Look at that. the revenue and net income on the income sheet, and then the balance sheet, super strong. So I don't know why Ulta's been hammered so much. We've got a call that we sold against the Leaps option position in Uber. I like Uber long term. My target's much higher, 71. My target's 90. But we're making money on both sides in Uber, utilizing the poor man's covered call, selling that call against the Leaps option. And our good old friend Tesla is just getting killed, 228. And I like Tesla much higher. They're not just an EV car company, but they're getting punished, I think, for the political position, and I'm not sure what else. But target for them is 450. It's double where it's at right now. So to me, this is a no-brainer moving forward. SoFi, same situation. All these Leaps options were out 300 days, 374. So I'm not worried about them. This $11 will be double in a few months, and we're going to be up at our target price, which is much higher, 30. Yeah, these guys are changers in banking. So that's about it, guys. So I just wanted to cover most of those positions. Let me know what you're trading down below in the comments. All right, guys, that's it for this video. Let me know in the comments below what you're trading this week with the market down and all this tariff talk. Are you long tech, or are you diversified in other sectors, financial, whatever? Let me know. Ask a question as well. I answer every one. And be sure and download the free options workshop in the link below. Remember to hit like and subscribe, and I'll see you in the next video.